A very good afternoon and welcome to HYCM's online trading workshop with myself, Giles Coughlin, Chief Currency Analyst here at HYCM. A very good afternoon and welcome to the session. Looking forward to taking us through the session. Hope everybody's doing well and I hope everybody is having a good day and looking forward to just explain the current market sentiment and identify a potential trading pair for trading today. Please could you also remember that we have a question and answer function on this panel, and please do use it, saying hello on the Q&A and the chat box, and any questions that you have yourself in terms of the dominant currency sentiment pair or currency you're looking at trading. Please do leave a message there for me, and I will get to it during the webinar. Great. Well, before we get going, I'm just going to run through a quick disclaimer, making sure that folks realize, particularly if you're new to this webinar, the whole idea of these workshops is you look over someone who has a professional trading background, and using that, you decide to make you use my decision-making process in order to inform your own decision-making process. So what I'm trying to say is that it's not a signal trading service. So just because I say this currency pairs are expected to go up or down, it's not an invitation to trade or trading advice. It's all from an educational perspective to help you choose your trading decisions better. So with that being said, we'll move on to the webinar. And just as we try to look to back a strong person against a weak person in an arm wrestle, which arm would we think we would win? We think the strong arm would beat the small arm in exactly the same way. In the financial markets, we're always looking to trade weakness against strength, because that gives the biggest benefit to us. So I'm just going to go through a few opportunities that I'm looking at in the financial markets and hope that that is helpful for you guys. Now, just taking a look here at the Aussie US dollar. Now, markets have started on a risk-on footing today. We just take a look here at generally equity markets. What we can see is that Asian equity markets traded in the green. They followed the positive moves in Wall Street yesterday, largely tech stock driven, and the drive higher in technical stocks yesterday was driven partly as well by Netflix. Netflix came and had a very strong reading, which boosted earnings reading, which boosted stock markets in Netflix share prices up by sort of 10–12%. So there was always the risk of that sentiment boosting sentiment generally, and it did help, as well as incoming Treasury Secretary Yellen didn't have any big surprises for the market, so it gave the market permission to carry on in that risk-on positive setting, which is the path of least resistance. If you just take a look, over the last few weeks, you can see that stock markets have just been generally moving higher, and that is the path of least resistance, buying on the dips. And you can just see that S&P 500 falling back into those dips yesterday. See, that was the key trend line, tested the trend line, we found buyers on the dip, and prices just moving up towards all-time highs, the S&P 500. So that's very much the mood that was in the market. Now, taking a look at European equity markets, you can see that we started the session risk on as well. Bond yields higher. We can see that commodities broadly higher. The crude complex moving upward on anticipation of greater oil demand coming in the second half of this year. We see a little bit of upside in gold, a little bit of upside in silver, and taking a look at the currencies generally, we see that commodity-based currencies, Aussie, CAD, New Zealand dollar, are higher, which is what you'd expect in a risk-on market. And we can see weakness in the Swiss franc and the US dollar, which is what you expect in a risk-on market. Yen showing a little bit of strength, which is not what you'd expect. But broadly speaking, we're seeing a pretty textbook risk on market. So in this kind of environment, we'd expect to see buyers in the Australian dollar, and we're expecting sellers in the US dollar. So that means that any retracement back down to this 0.7700 level can be considered suitable for buyers. So it is possible to buy at market at 0.7725 and look for another run higher in the Aussie US dollar. But also a pullback here would be my preference, looking at 0.7700, looking for a return and then a move back up higher later on in the session. So that's the Aussie US dollar. Similarly, we have an upward bias in the Aussie dollar Japanese yen pair. You just take a look at the Aussie yen, we'd expect exactly the same movement. Risk sentiment is on. The Aussie yen is a global growth risk pair, but when global growth is expected to recover, you tend to see gains in Aussie yen. That's why the Aussie yen fell so sharply in COVID-19 and then recovered. You know, there was lots of talks about this V-shaped recovery, and that's exactly what we've seen. We've seen a V-shaped recovery in the Aussie yen, and the Reserve Bank of Australia have finished their cutting cycle, and interest rates are only set to rise from here, and the Aussie yen sets to gain. The opportunity, there's two opportunities here. There's one opportunity at market. You can see here that we have a left shoulder, right shoulder head. We could enter on a buy, looking for a run much higher up towards 90 on the medium-term basis. So this Aussie yen pair does look attractive for medium-term buyers. The risk to this outlook would be if we saw risk sentiment changing. So if we saw COVID-19 cases rising, if we saw equity markets falling, if we saw fiscal and stimulus packages from central banks and governments falling, that would invalidate this outlook. Because as things currently stand, and you can see this break of this neckline, retest the neckline. I was looking at buying positions here. I bought in a position around here, around 79.70 in my private account, and just looking to try to hold that longer term. One other potential opportunity here is if on the weekly chart we get a bullish close, then again you can look to buy at market up the open of next week, with stops just running very tightly below that 79.23 level. So this area does become a decent area to run stops below. So stops could be run below sort of 78 would be well out of the way, ideally 77, and that does give plenty of upside room. So I think there's some real good potential upside in the Aussie yen. Technically, fundamentally, all the stars, as it were, are aligning. So that does look a decent potential setup. I am core long on this pair from sort of 78. I got in early and got in another position around 79-ish something, just under 80. So I'm looking at to continue to build on those longs, and a bullish close here will probably give me another opportunity to build another long position into that trade. So that's the Aussie yen. That's another opportunity. The other opportunity that I can see at the moment is the FTSE 100. One thing to be looking at. FTSE 100, it is an index I've been quite interested in, so that's the Nasdaq. There is a commodity an indices I've been interested in post-Brexit. Now, a lot of investment was just held back from the UK due to Brexit, and so we didn't see this V-shaped recovery that we've seen in other equity markets. So you look at the S&P 500, got that V-shaped recovery, and some. Similarly with the Dow Jones, that V-shaped recovery. Looking at the DAX, you get that V-shaped recovery. So part of the reasons for the FTSE 100 not demonstrating that V-shape, sort of stilted, is because of that Brexit risk. Now that Brexit risk has ended now, and come the end of December, the Brexit deal was agreed. You can see, come here, Brexit agreed, and then we saw this strong rip higher. So the investors who have been holding back, were entering in. So I do see more potential upside for the FTSE 100 on a medium-term basis. So buying at market stops below 6250 makes sense to me from a medium-term perspective. Looking at that monthly chart, it's easy when we look at the daily chart. Just see that trend line break. That for me was significant. This area is significant support. So stops running below this 6500 level makes sense to me from a longer term buying perspective. So over the next, this is potentially weeks and months before it gets back up to that 7600 level, but that does look one decent potential. So that is one to be looking out for, the FTSE 100. So there's a couple of opportunities, one short term and a couple longer term. So I'm just going to go to the question and answer section now. So if you've got any Q&As, please do type them in. And just while I'm waiting for any questions to come in terms of the key risk events coming up, we do have a key risk event coming up for the Canadian dollar. Now, the key risk event for the Canadian dollar is the Bank of Canada rate statement at 3 o'clock GMT time. So it's now just come up to 12:45 GMT. So just over 3 hours, we'll have the Bank of Canada rate meeting. Now, interest rate meetings are always very important times for currency markets because currencies are fundamentally driven by interest rates, and it's the interest rate changes which drives a currency. When a central bank raises its interest rates, a currency appreciates, it goes up. When a central bank cuts its interest rates, a currency depreciates, it goes down. So what we're looking for here when we're trading central bank interest rate decisions is unexpected interest rate shifts. Now, for the Bank of Canada, they are expected to keep interest rates on hold, and they're also expected to keep bond purchases on hold. So you can see the Bank of Canada rate decision coming up 3 o'clock GMT, expected to keep it on hold at 0.25%. Okay, CPI data is also coming up for Canada, and CPI data is expected to remain at 1.9% year on year, and the month-on-month, so the year-on-year data for the common, which is the one you want to be looking at, is the 1.5%. So what we're looking at here is if the Bank of Canada surprise markets with an interest rate cut. So if Bank of Canada surprise markets with an interest rate cut, then we'd expect the US dollar, Canadian dollar pair to rapidly appreciate. So if there is a cut in interest rates, then look to potentially go long US dollar CAD. Now, this level here, this region, this 1.2700 to 1.2715 region that I've highlighted here, roughly, there is a large option expiry level of $1 billion. Now, option expiry levels work like magnets. They push and they pull a price towards them. So if there's a surprise interest rate cut, expect that level to operate as some key support. Okay, so that 1.2715 level operate as key support, and again that pivot point, expect that to operate as key support. So for an interest rate cut, you expect CAD to drop, and you'd expect US dollar CAD buyers on a retracement to that pivot point. So look for that, but this is only if they surprise markets with an interest rate cut. Okay, the expectations is there'll be no change. Interest rates will stay the same. They also expect the fact that the bond purchases of 4 billion Canadian dollars per week will stay the same. So there is no expectations of any change. So if it does happen, it has more impact. One pair to look at is potentially CAD yen short. So if they see a little bit of unusual yen strength, which is just dragging down the CAD yen at the moment. Now, if that, in that case, if there's a surprise interest rate cut, you could expect sellers at market at CAD yen. So surprise rate cut, you can expect sellers at market at CAD yen. Now the one way to play this is before the interest rate decision, you can have a sell on stop at around, say this was like 1 minute before the decision and you're 81.66. Just put your price entry sell on stop about 20 points below price, say 81.46. And if there's an interest rate cut, you'll just get taken in with the price, and price will probably move down to sort of 81.15, 81.20. So you can potentially take a decent move down lower. So that's one thing to look at with the Bank of Canada. Surprise interest rate cut, expect sellers, and you're looking at targets that 81.20, 81.30 level as a first port of call. I wouldn't hold it because there's reasons for yen weakness today due to the risk on sentiment. So it's not one to hold. This is just, there's a surprise interest rate cut. It's just a quick, short, sharp move down lower and an opportunity for some quick profit potentially. So that's what I'd say that's the key event in terms of risk events coming up. The other events to be aware of is earnings seasons, and there are a number of key earnings out later on in the session. Those earnings seasons can affect risk sentiment. Earnings are good and positive, that's great for growth, good for risk sentiment. Just remember Netflix, one of those stay-at-home stocks which has been really boosted really boosted over the years. So looking at, I'm just going to show you that. Let me just show you. So this is something I was talking about yesterday, and you may have seen on my blog or me talking about Netflix. Now Netflix has a strong seasonal pattern, and you can see that Netflix over the last 18 years has an average return of 19,000% with an average return of 12.91%. So this was a trade I took. I did buy some Netflix into the start of the week on this pattern, and Netflix did exceed earnings. The reason for this pattern is that Netflix tends to out perform in earnings seasons. It's a repeated pattern, and they've done it again. So between now and 28th of January, the average return is 12.91%. So we've already hit average pretty much off the bat, and the maximum profit is 65.74% profit. So that's in 2013. Okay, so that just shows you what can be achieved there. So that was also part of the reason for the positive sentiment yesterday, and also that Janet Yellen didn't spook markets with any new policy or new ideas. She talked about extra taxation, but it was all meant to be proportionate, so she didn't set hairs running there. Although obviously being a Democrat, Democrats in power, they are expected to be more dovish just generally. So no surprises. And Netflix did outperform again, so it's a nice little return if you're interested in finding out any more about this kind of seasonal trading. We will have some more information for clients, and I'm about to launch a product for clients, so do check that out. You will find out details shortly, and there is some good offers that we have for clients on that, so please don't miss that, and do email me if you want any more info on that. Okay, with that being said, that is the main issues for today. If there's any questions, I'm just taking a look at the question panel. No questions there, nothing in the chat box. So I'm hoping that no news is good news and that everybody is well clued in for the day. Remember, the thing to be looking at is just that risk sentiment. As long as risk sentiment remains positive, we are expecting Aussie US dollar buyers from any drop down into support. That's the key. I mean, likely the key driver today. Yeah, my blog address. Yeah, absolutely. Do check out my blog address. Almost all of my analysis goes up here, and you can just look at it there. I'm sending that out there. Do check that out. Also, I've got a Twitter feed as well. Follow me on Twitter. And it's Giles Coughlin at CCA, and I'm on LinkedIn as well. So there's lots of different places you can follow me. And please do, say hello. It's good to be in touch. Yes, this recording will be published as well, Nalanka, so you can come back here and look at that. Okay, folks, I hope this has been helpful for everyone. Short and sweet today, but I think we've covered everything we need. Yeah, thanks, Warren. Yeah, that's great. That's good. Yeah, that's good to hear, Warren. Thank you very much. Good to see some familiar faces here in the webinar again. Will, good to see you. Warren, Suna Selva, as always. And welcome, Alec and Guan. Hassan, good to have you again. Take care, everybody. And don't forget, we're back here again next week, same time, same place, and we will look at another dominant currency sentiment pair, as well as any other sort of medium-term opportunities that I can see. Take care, everyone. Now, one last thing I say is a Bitcoin. Just want to cover Bitcoin. I've had two reporters contact me today about Bitcoin, one from Bloomberg, one from the Financial Times, and it's just got me thinking. Remember, Bitcoin's seen a lot of volatility at the moment, and just to be aware that Bitcoin's likely to carry on seeing that volatility. So just be careful and don't use leverage trading Bitcoin at the moment. When you look at some of the falls in Bitcoin, there was like 25% fall this week, wasn't it, for about $40,000, falling down to just over $30,000. So these kinds of falls mean that Bitcoin is a very volatile instrument to be trading, from 40-odd thousand down to around 30,000, about 25% drop over 1, 2, 3 days-ish. So just be aware of that, be careful. That's the key trend line for me. As long as that trend line stays in place, the bullish picture remains. So we've had, we've had 1 test, 2 tests, 3 tests. That is a valid uptrend line. You could expect buyers from market, stops just underneath below for anyone looking at going higher here. But as I said, manage your risk carefully because of the volatility in the market. Yeah, thanks, guys. Take care now. Goodbye.